Let's get more in that story now with Ishaq Siddiqi, who is market strategist at ETX Capital. He joins us from London. Obviously, being CNBC Africa, Ishaq, we are interested in the Africa angle to this. In the developed world, it's a two-horse race with Nokia far behind Apple and Android. But here in the African continent, Nokia still has a very big market share. So
Absolutely.
I guess from your perspective, would this be a good thing for Africa that we now have if you like, Nokia is now going to be managed by a seriously large business?
Yeah, absolutely. Look, I think when it comes to Nokia, they have been very slow to address the decline in sales across the developed world. However, they still have that emerging market space as the stronghold, particularly in Africa and also in Latin America. And going forward for Nokia, the real key here was that Microsoft really was in a position where they needed to continue their place in the smartphone market. They've come out with this Windows Phone under a strategic alliance that they signed with Nokia back in 2011. The integration was already there. Both businesses were working together, so they've established synergies and an understanding between both in a cooperative deal. It looks like this deal was long in the making, and when it comes to addressing the actual situation in the smartphone market, I think Microsoft really had to pull the trigger at the right time. And for Nokia, it is still a dominant force in the emerging market space, and I think that's what Microsoft were really looking at. For Microsoft, really, it was a transformational deal. They're going through a change in business strategy where they're trying to really stem the decline of the drop in global PC sales and also in their tablet sales, which have failed to pick off. And for that reason, I think that Microsoft are now looking at the devices, the handset devices area, as a place that they can actually start putting some formidable sort of threat to the likes of Apple and Samsung, the two big giants in the smartphone market. Interestingly, Nokia's overall market share in the smartphone world has dropped to about 3% currently, from around about 49.4% since 2007. So Nokia is a shadow of what it used to be. And I think Microsoft's view there is that although it has that 3% market share predominantly in the emerging market space, perhaps now they can start pushing it forward into the developed market space. And I think this is, like you said, very good news for consumers in the emerging market world, as now we have Microsoft, a big tech giant, who will be able to really pump in the right sort of resources and funding to really push the Nokia brand forward.
Do you think that the number three, and we know in tech, number one tends to take the lion's share of everything, profits and the lot, to coming in as number three, that there is a realistic chance that Microsoft stroke Nokia will be able to challenge those top two?
Yeah, absolutely. I think that's the big concern in the market. I mean, we can't at this moment measure how profitable this could be for Nokia and for Microsoft combined. I think they can possibly really infiltrate this market in a big way and make some headway. That's because there is some good signs of adoption of the Nokia and Windows Phone handsets. I think Microsoft is really honing into their Windows Phone operating system to put into these devices as one of their big driving forces for profitability, and they're entering a very competitive space. So when it comes to Nokia, they were pricing their handset models at a pretty high rate compared to some of their rivals. I think Microsoft, given the fact that they have more cash in the books, they can address the particular competitiveness in the market by pricing their models at a cheaper rate, which will allow them entry into the smartphone market, mostly into the emerging market space as well. So there is a place for Microsoft in this market. Apple and currently provides its iOS operating system. Google-based Android phones are currently provided by a number of handset makers, ranging from Samsung to Sony to HTC. And Windows certainly has a place in this market. It is an alternative option. There are many people out there who are looking for a different sort of OS system, and Windows is there to address this. I think going forward, it's going to be a very good deal for Microsoft and Nokia. And Nokia, at the same time, retains its overall control controlling the company and the brand. And as a company itself, Nokia still gets 3.2 billion euros on its books in cash. It manages to maintain its huge mapping system, which is widely held in the automotive market, and its media system and its messaging services, and also its network solution services. So win-win for both companies in this deal, I think.
Ishak, here in South Africa, we are also watching the deal of the century. I'm not sure if there's been a 130 billion rand transaction before, certainly not in the telecoms market,
yep.
but with Vodafone being the controlling shareholder of the biggest cell phone company
yep.
in South Africa, Vodacom,
yes.
That 130 billion that is going to be unlocked by its sale of 45%
yep.
of Verizon. Do you have any thoughts of where that might go?
Yeah, well, look, I think initially the first real thing for Vodafone here is they've got this big cash now coming in from this stake that they've been looking to sell for the last 10 years. I think this was very much an uncertainty hanging over the stock price, and I think the investors can now finally start moving forward, and they're very encouraged by the news that Vodafone has managed to offload this, particularly at such a large sum. And when it comes to their operations abroad, Vodafone it's a highly leveraged company, and they can now start paying their debt down, something that was very crucial for them. They've also had a decline in sales across the peripheral nations in Europe, Spain and Greece and Italy, and also in other parts of the world such as India. And they've also suffered from a bit of a setback in the African market as well, from what I understand. So at this point right now, with the cash on board, it's really just going to be a case of Vodafone really pumping it back into the company. And I think with Vodafone, with this cash that they've got now, they can actually start looking at acquisitions. They recently purchased Cable Deutschland in Germany to make some headway into the cable market in Germany, which is a very lucrative market, given the fact that Cable Deutschland is only one of the only few competitors or few companies that offer cable in Germany. And I think that's going to be Vodafone's way forward now. It's going to be looking at value increasing deals, earning equitative deals that's going to allow it to expand internationally and also pay down debt at the same time.
Thank you for those insights. That was Ishak Siddiqi talking to us from London. He's the market strategist at ETX Capital. Remember,